our expert on the show live today, who will be sorting out your life financial planning queries. I have with me Hemant Rustagi, CEO Vice Invest. Hemant, good evening and welcome to the show. And let's take Ria's question first. And Ria writes that she has 10 lakhs to invest in lump sum, and she also wants to invest in stocks and begin her SWP. She is 24 years and she lives in Mumbai, and I'm not sure why she wants an SWP, or maybe she just wants to understand the concept of SWP, because talking about investments, if there are any, we don't have those details. Or maybe she means SIP and not SWP. But in any case, 10 lakhs lump sum. Obviously, for stocks, she might have to ask this question on any other show, because we keep talking about stocks on the channel throughout the day. But then let's explain her the concept of STP. She might want to do that to park 10 lakhs in a staggered way. But also SWP, because she needs to have a financial plan aligned for that purpose also, if she's maybe wanting to have an SWP from this particular amount. Could be for any reason. We don't have her on the phone line, which is why I'm stuck with a lot of questions in my head, and I'm just trying to, put out all the questions that Ria might want to ask. So yeah, Hemant, let's take it one by one. Let's help her understand the difference between STP and SWP, if at all she means STP and not SWP.
Okay, sure, Kavita. I think both are very, very important. I mean, STP as well as SWP. STP is more about investing, how you invest. SWP is how you take your money out through redemption or a systematic withdrawal plan. When we talk about STP, it's basically systematic transfer plan, which means that, look, usually we do SIP for systematic investment. So what happens is that money which is lying in the savings bank account, okay, you kind of instruct the mutual fund that take out this much money every month from my account and put it in the pre-decided mutual fund on the pre-decided date. Now, usually SIP is done by someone who does not have a lump sum money, who may like to accumulate money over a period of time. And so that's why you do SIP. STP is for someone who has a lump sum money, but may not like to take exposure in the market on a particular date, may like to invest in a systematic manner. So what you do there is that you choose the fund first, in which fund the money will go. For the same mutual fund, you take a liquid fund. So for example, if I have 3 lakh rupees and I want it to be invested in a particular fund every month over the next 1 year, right? So I will put money in a liquid fund of the same mutual fund and instruct the fund to take out 25,000 every month from the liquid fund and put it in the fund which has been decided. So that is systematic transfer plan. It allows you not to commit money at one level, but allows you to invest systematically exactly the way you do it in SIP. The only difference is in SIP, you do not have the lump sum. Here you have the lump sum, but still taking systematic bets. SWP is basically for someone who has accumulated a corpus or may like to invest as a large corpus, then generate a regular return. So what happens, suppose I put 10 lakh rupees in a fund and then instruct the mutual fund to take out, let's say, 10,000 rupees every month. So the fund house on that particular day will redeem the units worth 10,000 and give that money to you as a regular income. So what happens is, despite the fact that you're in a market-linked product, you are assured of getting a certain sum every month. At the same time, if you choose your fund well, if you do asset allocation well, it allows you to make your money grow too. So for example, if you're in a hybrid fund and which is giving you a return of, let's say, 10%, what you are taking out is 5%. So the remaining 5% gets added back to your portfolio, which means that you're generating regular income as well as you're also making your portfolio grow. But the key factor here is very important. Your time horizon is very important. Your risk profile is very important. Now you need to see there whether you're investing in equity fund or in a hybrid fund or maybe a mix of both. So I think these are two very, very important concepts, very important for every investor to understand.
All right. So I don't have Ria with me, and the funds that you're recommending are Kotak Multicap and HDFC Large and Mid Cap. Is that right?
Absolutely. If the intent is because she mentioned about the stock, since you're looking to invest in a mutual fund, obviously these two funds will allow her to have exposure to all 3 segments of the market in the manner that really works out well for you in the long run.
All right. Let's move on and let's take Vijay Kumar's question. Vijay, hi, good evening. You're calling from?
Yes, madam.
Hi, Vijay.
Yes, Neha.
Okay, so you've got HDFC FlexiCap, Parag Parikh FlexiCap, Quant Active, Nippon Multicap, SBI Contra, Quant Multi-Asset, and you're investing 10,000 each, and you plan to do this for 10 years. Is that right?
Yes, madam.
Any specific corpus that you want to accumulate to this investment?
Yes, investment purposes, madam.
Sorry, can you? I didn't get you. What?
Yes.
Any specific corpus that you want to accumulate, Vijay?
I'm a doctor.
Okay.
I'm a doctor. We have regular income. So
Okay.
just for my family members, for my children, just I want to invest.
Okay.
This.
Okay. All right. So
madam,
is this?
madam, I want to
Sure.
know, are these, my selections are good for the time being,
Yes.
because market is on all-time high.
Mm-hmm.
So through your channel,
Sure.
I have learned that
You-
flexi and flexi cap and multi cap.
Yeah. So Vijay, I have got the fund names. So Vijay, I have got the fund names. I just read them
Yes.
out. I want to understand that you've been investing since how long in these funds?
10 to 15 years.
No. That is the time horizon you want to invest till. But since how long are you investing?
I mentioned that, madam,
You started your-
last year, 5-6 years.
Okay, since last
From
5, 6
5 years.
years you've been investing. Sure. Okay. So now since you mentioned that this is for your child's future, is this about the education goal that we are talking about?
My children
Child
are also
education
in
goal?
class. My
Sorry?
children are also in class. They are also doing investment in mutual funds.
Okay. All right. Hemant, I think we've got enough information to begin his financial planning. So 10,000 rupees each and for 10 years. And let's take the goal as wealth creation. Hemant.
So I think if you look at the time that he said he has been investing in SIP through SIP for the last 5 years, he has another 10 years to build this corpus. So I think in terms of asset allocation, he's doing perfectly all right. He's investing mainly in the equity funds. So I think this is a perfect time horizon to allow your money to grow and benefit from power of compounding. Also, I think if I say broadly in terms of category of funds, I think he's done well. He has flexi cap fund, he has multi cap fund, I think multi-asset fund, he has contra funds. I think he's done well broadly. One change that I would like to maybe mention to him here, like I said, broadly the funds are good, the categories are good. Okay, but I see two flexi cap fund, I also see multi cap. So I think what happens is that one segment of the market which is missing from the portfolio, especially for someone like when you're investing 60,000 rupees per month for the period of 15 years, is mid cap. I don't see a mid cap fund. So what I would recommend is that instead of Parag Parikh Flexi Cap, he can look at Motilal Oswal Mid Cap. So he will have HDFC Flexi Cap, he will have a Quant Active, which is a multi-cap fund. He will have Nippon Multi-Cap Fund, SBI Contra, and a multi-asset fund and a mid-cap fund. So I think that's the only thing I would say, one change that if you think he can consider, considering that he has another 10 years to do.
Vijay, did you understand what Hemant tried explaining? Sure. Sorry, can you repeat?
Just I have to change from flexi cap.
You can consider adding Motilal Oswal Mid Cap Fund in place of Parag Parikh Flexi Cap.
Thanks, madam. Thanks.
All the best, Vijay. All the best. Okay, let's move on and let's take Jayanta Sarkar's question. He says that he's 52 years old and a conservative investor, and he's made a financial portfolio for himself, and he's got debt fund concentration on the heavier side, whereas equity is limited to large cap, flexi cap. He's got a couple of focused funds and large and mid cap category in his portfolio, and he also had investments in a thematic category where he's booked his money from. He's liquidated that investment, and he also booked it from a mid cap and active momentum which he had in his portfolio, and he has moved that corpus to a debt fund or an arbitrage fund. And now he wants to understand a couple of things for China-oriented fund of funds. And looking at the attractive valuation in China and certain issues related to Taiwan, etc. He wants you to help him to figure out whether Edelweiss Greater China Equity Offshore Fund can be in his portfolio, looking at a strategic or maybe a tactical position in his fund. And he's also looking at Mid Asset Hang Seng Tech ETF fund of fund. He already invested 50K in it, and even in the China fund he's invested 150K in 2021. So these funds have not been performing well, obviously, because of the performance, because of the situation, the economic situation in these countries. So he wants to know whether he should be exiting these funds. And yeah, that's all about his portfolio so far. And given the higher valuation and potential risk of recession in US, should he be considering his monies out from this market as well? Hemant.
Well, Kavita, I think there are two parts here. The first one is, as is evident that he has kind of rebalanced his portfolio. He has changed his asset allocation, so he has moved out from some of the aggressive category of equity. And not only that, he's also moved money out of equity and gone into debt and hybrid. So obviously, he has changed his risk profile, which I can understand. I think is very, very important that you keep an eye on your risk profile. But I think it's equally important to also look at what is your time horizon from here on. Because there are two risks to your investment portfolio. One is obviously the risk of losing capital, a part of capital, and second, the risk is inflation. So when you make your portfolio very conservative, and if you have time on hand still, because I think it's just 50 years old, so there, I think what happened then, you struggle to beat inflation. You struggle to earn positive real rate of return. So my recommendation would be that if he still has time on hand, what he can do is maybe instead of going purely into a debt fund or arbitrage fund, he can consider some hybrid category. If he doesn't want to go into 100% equity fund like equity savings or balance advantage fund, where he can hope to earn better return than what we get in debt and arbitrage fund. So I think it's very, very important to keep an eye on inflation, because ultimately in the long run, inflation is a far bigger risk than losing a part of your capital. So that's the first aspect. Second is, if you look at China specific fund of fund, both the funds, he's lost a lot of money. I think in one fund he had invested 1,50,000, it's at 59,000. Other fund, I think he invested around 50,000, is at 35,000. So obviously, if you were to look at compared with that with Indian markets, I think India is the place to be in right now. On different parameters in terms of economic growth, the way the markets are doing, the way the liquidity, the way the fundamentals are. So my view is that since the focus is that he wants to obviously recover his losses, I don't think it'll make sense for him to go into debt from there. He'll not be able to recover that money at all. Since it is not a major part of his portfolio, and he also mentioned that he's not really in need of any liquidity. So I think he can give this part of the portfolio time to grow. So my recommendation would be that in Edelweiss, he can consider the multi-cap fund. He can switch the money out of China fund and go in there. And in the Midai fund, what he can do is he can go into a large and mid-cap fund. So what happens is that you remain in equity as an asset class, you invest in Indian markets across different segments. I think that you allow your money to grow from here and hope that you can kind of not only recover your losses, but also get some, healthy growth from there on. So definitely looking at his overall size of portfolio, looking at the quantum of investment in this, I think he should move into equity funds, which are domestic equity fund, like I mentioned, two of those funds. But that I think is the best bet for him in the current market situation.
All right. Okay, so clearly a couple of changes for Jayanta that you've advised, and we also don't have him on the phone line. I would really request Mr. Jayanta to call us back if in case he needs any more clarity on his portfolio, because since he's 52 years old and a very conservative investor, he's protecting his capital right now and also looking at having a growth aspect with his money and financial portfolio. So in case any more doubts, do give us a call once again. Let's connect with Mr. T. Vijaya, and he's from Chennai, I believe. Mr. Vijay, good evening.
Yes, hi, Kavita. Good evening.
Hi. Thank you so much for sending us your question. And you're investing in ICICI BAF.
Yeah.
Okay.
Right.
And what is the amount that you have accumulated, and since how long you've been investing?
See, actually, I opened this account, investing in PAF 5 years ago to ICICI
Sure.
Bank. Okay.
Okay.
So now
Okay.
I came to know that it's a regular fund. Okay. Uh, so I thought, I would like to move to a direct fund. Okay, in ICICI, within ICICI.
Sure.
Maybe at 10,000 per month, STP, I thought, would be a good option to move to a new fund. So basically,
You
I'm
can
looking
switch from
for,
a regular scheme to a direct scheme.
yeah, direct. That's right.
Yeah. Okay. You are also
No,
interested
actually,
in
I'm in the
investing in
accumulation
ICICI?
phase.
Huh.
No, actually,
Okay.
I have some goals. I'm in the accumulation phase actually. So that is why I
Okay.
thought, instead of having so much money, right, 5 lakhs I have, 5 lakh plus in this path. So I thought, 10,000 per month we can move it to, a high growth fund and then, could
Okay.
allow the money to grow better. Yeah, that was the
Okay.
idea.
So you want to move out of the category itself?
No, not category itself. Maybe temporarily in the growth phase, right? Accumulation phase. I thought, we can move
Right.
50% of that via STP to a
Sure.
new fund, a better growth fund. Yeah.
Yeah. All right. So in the balance advantage category, you've accumulated 5 lakh, you said.
Yeah. Yeah. Right.
Okay. Okay. And the other funds that you are looking at are ICICI Bharat 22 Fund of Fund or Opportunity
Uh,
Fund. Is that right?
yeah, I thought those returns are good, along with ICC manufacturing also. So
So,
I thought
yeah.
I would like to have some recommendation, which would be a better option. Yeah.
So, are you open to any other AMC than ICICI?
Yeah. Of course, I'm actually
Okay.
investing via ET money. Okay, I have a portfolio.
Sure.
I have a portfolio. Yeah. Right.
So, what other funds do you have? Because we don't want to recommend you something that you already have in your portfolio.
Yeah. I will quickly tell you, Kavita, the funds. Okay, and one more request from my side is, I just want to map these funds to my goals actually. See, I have a short-term goal. My son
Sure.
would be passing out of school in 3 years, 3 to 4 years to
Okay.
college. So I for the college higher education I may need some 20 lakhs. Okay, down the lane 3 to 4 years, and that is one of my main goal. And the next bigger goal is the retirement. That would be, I'm 46 now, so I'm just aiming, to accumulate in another 10 years actively. Okay, so maybe around 56 or 58, I'd be retiring. Okay, so that
Corpus
is the
amount?
second goal.
Corpus
Corpus
amount?
amount, roughly I would require, like 1.5 to 2 crores, for that retirement, right?
Sure.
So, yeah,
Okay. And quickly, can I know the
if you
funds?
allow me,
Because,
I would tell you the funds. Yeah. So
yeah, quickly.
I have the list of funds is, I have a Nippon small cap, okay,
Okay.
wherein
Okay.
I'm doing a SIP of 10,000 for the past
Sure.
5 years. So now the
Okay.
corpus is around the 7 lakhs now, along with
It's
the
okay. You can
investment.
just
Okay.
tell me the SIP
Uh,
amount, and you can just tell me the name of the fund because
I'll
the
tell
show is
you
also
the
about to
SIP and
end.
the
Yeah.
fund. Nippon India
Yeah.
small cap 10,000. Okay.
Yeah.
And the Quant ELS is one time I did lump sum for tax exemption. That is 3 lakhs. Okay. Lump
Okay.
sum. There is
Okay.
no SIP in that. For Quant
Got it. Yeah.
ELS. Yeah. And then I have a HSBC mid cap. So that
Okay.
is 5,000 SIP. Okay.
Okay.
Yeah.
Okay.
And then I have a index fund in the Motilal Oswal mid cap 150. Okay. That is also
Okay.
5,000. Okay.
Okay.
And
Okay.
instead of for the large cap, instead of a large cap, I have an UTI Nifty 50 index fund. I'm doing
Got
5,000
it.
in
How
that.
much is the SIP?
Okay,
5,000. That's it?
5,000. Yeah, and then
Okay.
Parag Parikh, I just started, some 6 months back. So that I'm doing an SIP of 20,000. So this is my portfolio.
Parag Parikh
Kavita.
Flexi Cap. Flexi Cap.
Flexi cap, yeah.
What's the fund name?
20,000.
Okay.
Yeah.
All right.
Yeah.
Okay. Quickly, these details were not given to us, and so Hemant won't be having those details. But then, whatever you've able to gather in terms of information, Hemant, what would you suggest? He's got a short-term goal coming up in 3 to 4 years, 20 lakhs over there. Retirement is after 10 years. But having said that, he also wants to redeem certain part, 50% from his ICICI BAF, and then put it into a higher growth category, which can be any of these that he's just mentioned. Hemant.
But Kavita, I'm afraid I couldn't hear the questions, or what details he gave you. But whatever I've understood, let me just address that ICICI BAF thing first. If he's looking to kind of pair his exposure by 50% and go into some equity fund, if I heard that correctly, then he mentioned about two funds, like one of them is India Opportunity Fund, right? And the second one is, I think, the index fund of PSUs. So CP's fund, I think. So my recommendation would be that if he's looking at a thematic fund, then India Opportunity Fund is very well. I think it's a very good option. The fund is doing very well. It has an excellent portfolio. But if he's not really keen on investing only in a thematic fund, then there are a couple of other options like ICICI through large and mid cap or multi cap. Those funds, two funds have been doing very well. He can consider one of those. The second part, I think you need to tell me, Kavita. He said about retirement for the next 10 years, right?
Right. Exactly. Yeah.
So which are the funds? I couldn't hear the names actually.
So I'm actually running out of time, but then I would still take 30 seconds more. Nippon India Small Cap, Quant ELSS, lump sum 3 lakhs. The Nippon India Small Cap is 10,000 SIP. HSBC Mid Cap, Motilal Oswal Mid Cap again 5,000. UTI Nifty 5,000 SIP. Parag Parikh Flexi Cap 20K. That's the SIP amount in these funds.
I would say the fund selection is very good, but I think the allocation to Parag Parikh is quite high as compared to others. Maybe 10,000 of that can be invested in a large and mid cap fund, which can be Motilal Oswal large and mid cap, HDFC mid and large cap. I think because you are investing for a longer period, so it's very important that your allocation to different market segment is fine. So I think once you do that, overall, I think the portfolio would be fine, still considering that his time horizon is still 10 years from now.
Time is up, but then that's all we can accommodate in terms of viewer queries on the show today. Thank you so much, Hemant, for being on the show and helping our viewers with their financial portfolio queries. And before I sign off, I'm going to leave our viewers with our WhatsApp number and email ID where we keep waiting for your queries. Only show where we get your live financial planning done by our experts. So do send across your questions. Thank you so much for watching. Goodbye.